Welcome back to my channel, everybody. Thank you for tuning into this video. And I'm going to recap and basically review the market the past 2 days. And I'm going to explain how to trade around the market sell-off. And as you guys know, the market sold off very aggressively this morning and sold off all day yesterday. So we did have a very aggressive market sell-off. I'm going to explain how to trade around it, how to create a plan around it, and basically the setups that you want to look out for. And then I'm also going to go into my Discord room in this video and show you the 2 plays that I personally took today. And I'm going to break them down as best as I can, my reasoning, my thought process behind the trades, basically what I was watching out for. And I explained my overall outlook on the market, what I really am expecting the next couple days, even going into next week. On my Instagram, I posted it yesterday on my story. So if you aren't following me on there, I will link my Instagram in the description below. It's definitely worth a follow. So without further ado, let's break down this market and basically break down how crazy this action's been. So without taking up too much time explaining this, yesterday was our first real sign of a down day. Major market sell-off. The sentiment was obviously very bearish, and there was basically no bidders in the market. It was just continuous selling off, and every demand zone was getting chopped through. We broke below it and really served no bounce at any of the demand zones that we did have yesterday, except these higher time frame ones, such as the 3 and 4 hour, which I'm going to get into. But when a zone gets broken through, it becomes invalid, and you could completely remove your charts because they're useless now, and the whole supply and demand concept obviously gets thrown out the window because we are below the zone and traded basically through it. So when a stock or a market, in this case the ES future, the S&P, comes into the demand, the first demand does not work. We have no confirmation, no signs of a bounce. Obviously, it's a no trade. Then when the market starts selling off aggressively like this, instead of trying to step in front of the train, wait for confirmation and wait for the next demand zone to trigger. And if there's no reaction from buyers, no bidders stepping into the market, then obviously, again, don't take that trade. You shouldn't be taking trades as soon as a zone triggers. You have to wait for a reaction from the market participants. Another thing you could do also is you wait for a pop out of a demand zone, like in this case. And then if you missed the rally to the upside, all you got to do is then wait for a retest, come back into the demand, or come back into the new demand that formed from that first bounce. So that's just what I would do instead of trying to catch a falling knife. I'm going to add a video like this, obviously more in detail, to the course this weekend on how to play days when basically demand crumbles and what to do around it, and basically how to get a couple telltale signs. But just going over my plan, so I posted this again yesterday and I did a recap on this on my Instagram. But this was my plan for the S&P. It's a very healthy liquidation in my opinion. The past 2 days, you're going to have a lot of perma bears now basically saying, oh, the market's going to come down, which is very possible. You have to be flexible and create a plan around it. I'm a day trader. I don't really focus on, overnight swings and stuff like that. But what I was really watching was for this 3433 10 or 3433 to 3410 level, which was a major area. It was a major demand zone. What I wanted us to hold. Obviously, in the overnight session, we did hold the 3433 area, did bounce a little bit, but nothing crazy. And the market did open up and sold off again today. So this zone, the top one, is a used zone because we used it. Traded inside it yesterday, so obviously a little bit less of a significance to me. And then we did again have a very aggressive sell-off this morning. Sentiment was very bearish. No reason to play calls in this demand, and no reason to basically catch a falling knife. Like I said, you wait for a bounce, then you get back in on the retest. Wait always for confirmation. But this is the 3390 to 3345 zone that I really wanted us to hold, and we sold off aggressively. Basically, my reason behind this is that you're going to profit the most from when there's the most pain in market participants. When now every trader is now, oh, I'm so bearish on the market, holding puts overnight, and then we get another aggressive sell-off in the morning. That's what that's going to do is it's going to attract a lot of participants. It's going to attract a lot of shorts, and when shorts are going to start hurting, that's when you're going to get the real bounce. It's all about pain from your opponents. The biggest profits are going to come from when your opponents are in the most pressure, in my opinion. So I wanted to see that break. I did want to see this 3-4 top zone to break because I want more shorts to get all excited. I want them to be on board. And I said they might want to bring us lower to get more shorts. And then the magic could happen, in my opinion. If that occurs, 3390 to 3345 came right to the bottom of the zone, should act like a magnet and support us with some new buyers. And this is basically what we're looking at. Price sold off aggressively. A lot of shorts are now short in these areas here, and we got a strong rally and pretty much almost wiped away all our gains, or made back our gains from the open move. And now I want to go over Apple, which was a trade that we took today. It had a really nice 2-hour supply zone. I posted this in the pre-market plan at $123.29. And we were opening up near a 4-hour demand at 116 at the time I charted. And then going into the open, it started rallying about 4 points right before the market opened as we were close to this 4-hour demand. And then the market did open and we rallied about an extra 2 points right into this 2-hour supply zone. And we really didn't have strong confirmation yet. I'll show you when I took this trade short. So this candle right here, we were stalling out, but it just wasn't enough for me because it was too close to the open, number one. And number two, we really didn't have a strong reaction yet and nothing telling me that it's going to start coming down, even though we started slowing up. So you could take the trade once we start slowing down around the supply or demand zone. Personally, the way the market's been, I've been waiting a little extra longer for confirmation. But then the next candle looked like this, and at the time it looked not like a full-bodied red candle, and I took this thing short below 121.84 once we came below this second green candle. I posted this inside the intraday commentary tab, basically what I was watching out for, and then this thing started selling off and we were targeting the next demand, which was the 4-hour at 116, and then we broke pretty much very hard right below the zone. So like I said, now this becomes invalid, and this was a major sell-off straight from 2-hour supply. The Apple contracts went from about 350, 360-ish, all the way to a high of 1050. So that is a 193% return, basically from low to high, or from entry to the low a day. I scaled out at that 4-hour demand, so this was a very good trade. I know a lot of people took profits on this in the chat room. They made good money, including myself. So this was a very good one. And then the next trade was the Facebook short under 285. So 285 for puts on Facebook was what I was watching. 285 was a major support level, and I know I don't like trading support levels, but because we had demand at 281.60, about 4 points away, bigger demand zones act like magnets to price. So we did break below support, and what's the next target is that demand zone. So I took it short at a speculation that knew that we were going to trade at demand, and it worked very well because we had a couple confirmations. We had the market sell off yesterday, we had the market sell off this morning, and then we did have a support break. So let me see if I could pull this up. Tested it once, twice, 3 times, 4 times. Very strong level. If I see a support zone or support level test 3, 4, 5, 6 times, it's a very strong level to me, and it basically makes me want to pay attention to it much greater than something that's been only tested once or twice. So we did break below 285. Did trade right at this 2-hour demand, which was I was targeting, and I scaled out full position there as fast as I can because this thing sold off pretty hard and aggressively, way too fast for my liking. But we did come to this demand zone. I want to call this a stall. We didn't bounce, we just stalled out a little bit, and we continued to sell off to the downside. So from 285 to a low of 271, this was a good trade. Definitely killed this setup, and I know a lot of traders as well killed this in the Discord room. This was what I was watching in the intraday commentary tab. So I hope you guys enjoyed this video. Drop a like, drop a comment, and make sure to follow me on my Instagram. Link will be in the description. Appreciate it.